Hello and welcome to Cheppy Today. I'm Will and I'll be going through some of the most talked about topics in crypto. If you want to be kept up to date with the discussion, remember to give us a like and to subscribe. So we're starting off with a story that broke just this morning, and that is the hacking of the New Zealand exchange Cryptopia. The exchange team announced unscheduled maintenance yesterday, something which many took as a red flag, especially when maintenance didn't end for 24 hours. Rather than giving the all clear, the team announced in a statement that the exchange had been hacked. The statement announced that there had been significant losses and that the relevant authorities had been notified, adding that trading had been suspended, which is a shame because I quite fancied trading on a hacked exchange today. While details are still scarce, a tweet from Whale Alert noted that 19,000 ETH, amounting to nearly $2.5 million, had moved out from the exchange, transferring from Cryptopia to an unknown wallet. While the effects of this are immediate to the Cryptopia exchange and their clientele, the wider implications for crypto are just as bad. Cryptopia holds a huge amount of altcoins, boasting over 800 currently held on the exchange. This is quite a significant amount, especially when compared to Binance, which only holds around 400. This is made worse due to the fact that quite a few of those altcoins rely on Cryptopia as a main platform. Obviously, speculation has arisen around this attack, with much of crypto Twitter calling it an exit scam. Others are becoming frustrated with the lack of details around said attack, calling for the exchange to open up withdrawals for unaffected coins. And some are even retrospectively calling the hack, saying that it was bound to occur due to red flags such as bad customer service or just the sheer number of, for lack of a better word, shitcoins. So with this latest hack, exit scam, incompetence, whatever you want to call it, the major takeaway is hold your own crypto where possible. There's been a saying floating around the crypto space for a while now, which goes, not your keys, not your Bitcoin. It's the entire basis for the recent Proof of Keys event, which occurred at the start of the year to encourage crypto investors to withdraw their crypto from exchanges in an effort to avoid this kind of catastrophe and instill the lesson of truly holding your own crypto. The core fundamental of cryptocurrency is the divergence from middlemen. Exchanges are no better, nor will they ever be. So from that onto more bad news, and it's fair to say that the markets have been acting fairly erratic of late. Jesus! I don't want to do this! On Sunday, a reported $3 billion were erased from the global market cap in a matter of 40 minutes, bringing BTC down to 3.5k. On Monday, this was then followed by an upswing of $5 billion, bringing Bitcoin back to relative normality, whatever that is these days, but it was at least spared from the feared 3,000 mark. While everyone continues to argue where the bottom lies for Bitcoin, Willy Woo, an independent market analyst, brought forward a fairly comprehensible reason as to why the bear market hasn't ended yet. In fact, Mr. Wu suggested that the bear market was long from over last week, simply due to low transaction volume, something he's reiterated this week, stating there's not enough on-chain volume to fuel a prolonged move up. And it makes sense. Transactions are probably low because of the distinct lack of any incentive to trade. Incentives either being a big upward movement, which could bring the rest of the flock running, or some actual bullish news. Right now, it feels like crypto is ripe for a bull run. We just need that catalyst to incentivize some positive trades. But taking a break from the bad news, and speaking of potential market catalysts, Bittrex has launched its over-the-counter trading desk, providing nearly 200 cryptocurrencies. This desk will apparently facilitate trades of over $250,000. OTC trades allow those who want to initiate a large trade the ability to do so without impacting the market. It's also proven a perfect avenue for institutional investment. We're seeing more and more of these OTC markets open up from big players such as Coinbase and Circle, and it's a good indication that institutional money is actually coming in. For example, Circle recently announced that their platform alone saw $24 billion worth of OTC trades last year. However, whilst this seems like a lot, it's not when compared to the traditional OTC derivative markets, which the BIS states was at a gross market value of nearly 10 trillion at the end of June 2018. And this is where things get fairly exciting, because even with this current bear market, money is continuing to come in, and better yet, firms such as Bittrex, Coinbase and Circle see a place for these OTC markets, insinuating that there's a huge potential for further investment. But as always, we'd love to hear your take on the stories discussed. What do you think about the Cryptopia incident? Was it an exit scam? Was it a hack? So as always, leave a comment, leave a like, subscribe, and we'll see you next time.